Welcome, everybody. Looking forward to our session as always today. Excited to be here, and as always, there's lots to talk about, and so got a chance to look at the market and look at some open positions and evaluate where things stand. Hopefully, we'll have some time to go over some of your questions, and if there's some things that you'd like to share with the group, stocks, et cetera, that maybe you want us to take a look at. I expect we'll probably have some time for that as well. Um, just a quick reminder, and I know kind of just had a couple of people drop off because they presumably because of this section, but that's okay. Just I want to talk about really quickly how to interact with me and with the community. If you are on Discord, a couple of ways that you can do it. The easiest way to get in touch with me is through the open discussion forum that you have access to. This is a members only area where you can post questions, not only for me, but for anybody else. I've set up this channel so that you can interact with me and with the entire group, share perspectives, questions, comments, and benefit from each other's experience. I monitor this area throughout the course of the day and will try to respond to messages I see there as soon as possible. You can also message me directly in Discord. It's pretty simple. If I just select somebody here, then I can type in a message and it will go directly to them. So you can just click on Rebel Income, and you'll see an area there where you can message me. If you are on Substack, you can do the same. Right here in the chat area, you should see a prompt here for Rebel Income. This is another area that I've enabled for all members so that you can contact me and let me know if you have questions. All right. That was not what I thought it was going to be. All right, so go ahead and move on and start talking about the market. It is February 9th, so it's the second Friday of May. I don't have any open positions right now that are set for expiry, but we do have a number of them that are coming up in the next week. This week's trades also gave me an opportunity to start to break off from those expirations as well, so we'll be able to take a look at this week's put selling trade as well and see how things are going. Really quickly, I just want to get some ideas, or rather, I want to get a sense for kind of where all of you sit right now in terms of the way that the market is behaving and the way that you're seeing things. How have the last few weeks affected, changed? Maybe it hasn't changed the way that you're approaching the markets, the way that you're looking at opportunities for new trades. Have you been able to kind of just stay steady and keep things going as normal, or have you felt like you needed to make adjustments? Go ahead and put your comment in the chat, because I'm really interested to see get your perspective on how things have been going. When markets are volatile, there's a tendency to there's kind of a disconnect between the way that a lot of people are going to, different people respond, and it's not that one is better than the other or more right than the other. It's just a matter of opinion and perception. So I kind of want to get the sense for where that lands for each of you. Just a quick note, Barrick Gold, which is a stock that I've been holding for a while, changed symbols today. So if you have a position in this as I do, it's no longer GOLD, but simply the letter B. Gib, just cannot find anything that passed the rules. And actually, that is something. Thank you, Gib. I really appreciate that comment. Carl, maybe some would choose some different strategy of trading. Okay, I totally get that. I totally get that. And so, thank you. These are good comments. Gib, I really like what you just said. Just can't find anything that passed the rules. I think that's a really good comment, and it's a little bit. To me, it reflects a little bit of the way that things go sometimes. When you have a system in place that is working for you, that you feel has been successful enough for your purposes, sometimes that means sometimes the market kind of disconnects a little bit from that strategy, and that's not necessarily a bad thing. It just means that market conditions ebb and flow all the time, sometimes in your favor and sometimes not. There's a tendency to think that we have to be placing trades all the time. If we're not in the market, then our money's not doing anything. And I just don't agree with that. That's why sometimes you'll see me go ahead and pass on placing a trade from one week to the next. Sometimes I'm very much like you, Gib, and I have a really hard time even finding sometimes stocks to write about for my daily posts, because there's so much data I have to churn through, and a lot of stocks that just aren't even sometimes even some of the stocks that I pay attention to every single day for one reason or another. There may be entire groups of them that just no longer pass those expectations. Um, and I'm not talking about just saying they're good for a trade. I'm saying sometimes there's things that have changed enough that it's not even worth actually going through the analysis for the time being. Literally, they may just be, I'm going to put them aside for the next 3 months, wait for the next set of data, and wait for the market to turn a little bit. That's okay. That's not necessarily a bad thing, because I think that speaks to the discipline that is required in order to follow a system consistently. I hope that makes sense. And if it doesn't, then please let me know. But what we're talking about is just this idea. I talk a lot about trading frequency and how good morning, Jay. If you have an opportunity to place more trades over a same period of time as somebody who maybe is trading every week, every month, those kinds of things, if you're doing it a little bit more frequently, then the nice thing with Rebel Income and with income generating strategies like put selling is that you should be able to make more money, right? Well, at the same time, sometimes that discipline requires you to just kind of be willing to sit on your hands and recognize that sometimes the market is just not lining up for that particular strategy right now. Barry, I'll get to your comment. Thank you for that, though. I really appreciate it. And so sometimes if you're having a hard time finding anything that fits your rules, maybe that's a good sign that you can just wait for another day or another week or whatever it may be. Carl, I know you've used this term a lot in previous sessions where you've talked about being able to sleep well at night. Are these passing the sleep test? Well, if they are, that's awesome. But if they aren't, you still want to be able to sleep well at night. And so that's a really, I think there's a discipline to being able to let the market sometimes go and recognize that nothing is fitting what I want right now. Next week could be different. Tomorrow could be different. And so willing to let that go by and and wait for the next opportunity. There is a discipline and a mindset to that I think is really, really critical to long-term success. So I really appreciate that comment. And Carl, maybe some would choose a different strategy of trading. Yeah, and I'm not necessarily opposed to that. I'm not saying that you have to only follow one system of trading, right? Because sometimes market conditions turn and they're more in favor of trading in a different type of way. If you're going to do that, I kind of like the idea of having different baskets, as it were, of different baskets, not of stocks, but of styles that you can use. Maybe for one portion of your money, maybe it's focused on put selling. Maybe there's another basket or another group of money that you're using for swing trading. Maybe there's another group of money that you're using for something else. And if you're using some of those different baskets, then it gives you a way to kind of compartmentalize a little bit and still stay functional. Maybe when put selling is maybe not quite as productive, maybe swing trading might be a little bit more productive, and vice versa. And that's not a terrible thing either. All right. Yeah, I use the Detective Friday attack. Just the facts, ma'am. I like that. Barry, okay. I use two different brokerage platforms, Schwab and Webull. I use Webull for my speculative ideas and buying options. The cash there still earns about 4%, while Schwab earns 1%. Okay. So Barry is applying kind of the basket idea that I was just talking about. Thank you. You've got one account that is for one specific strategy and another account that is for another. I think that's entirely appropriate. And I'm not going to recommend one broker over another, but I know that both Schwab and Webull do a really good job. And you see me, I use Schwab quite a bit. I use Fidelity Investments as well. And I know a lot of people that really like Webull. So that's awesome. And whatever helps you to keep things compartmentalized, organized, and differentiated when it comes to the different strategies that you're willing to use, I think that's a good thing. Jesse turned me on to Webull. Jesse from Traders Pro, for those of you who may not be aware, yes, you're right. He is using Webull. He really likes it. So awesome. All right. With all of that said, I really appreciate that opportunity to kind of compare notes a little bit and talk about that. And I hope you found that to be useful as well. As I mentioned, there aren't any trades that are set for expiry today, although we do, as you can see, have a number that are coming up in the next week. 1, 2, 3, 4. So let's just go ahead and start running through them. The market has been a little bit volatile, continuing through the trend of April, of course, but some of the more conservative positions that I like, that I favor, Jay, a little, you know me, I like to be understated. So yeah, a little. Some of the positions that I like to use from a defensive standpoint have suffered a little bit in the last week or so, as the market has kind of shifted to a little bit of a risk on, quote unquote, risk on sentiment, as some indications are that maybe tariffs aren't going to be as high as initially thought. Some of those kinds of things, as those have come to light, then the market is kind of it's starting to bet bullish, right? If we take a look at the S&P 500, it has been rallying really strongly, is up a little bit so far in this trading session. And a lot of that has been driven by indications that maybe tariffs are going to be a little bit softer than normal. This morning, there's news that the U.S. and the UK reached a trade deal, and the market is taking that as a hopeful sign that there's going to be more to come. We'll see. Even some news that maybe tariffs on China aren't going to be as big as 145%. That maybe they might come down a little bit. Market is taking all of that as an opportunity to be a little bit more bullish right now, and as a result, some of the positions that we've been focusing on have been coming down a little bit. Conagra is an interesting example. Let's take a look at that really quickly. Down here at about 23.23. And this is a stock. Again, this is coming up for expiration next week. This is a trade that I set up a month ago, selling the $25 strike price. So the stock was a little bit above that price when I set the trade. It was up in this neighborhood. Oops. I want this. There we go. It's up in this neighborhood at the time, and we've seen it clearly traced down as the S&P 500 has been rallying up. And so this one is taking on the chin a little bit. It looks like I'm going to be assigned. Now, still a week to go. It could still recover. I'm not holding on to the position in the hope that it recovers and gets back above 25 in the next week. It could. To be honest, I don't expect it. I'm holding on to the position because that's the way that I work the system. I let these run through to expiration, and if I take assignment, that's okay. Even with the stock about $2 below the strike price that I sold for my put sell, I'm okay with that. It should give me an opportunity to set up a covered call trade at some point. Not everybody's going to fall into that, is going to agree with that perspective, however. So with a week to go to expiration, the question is, what can be done to try to minimize that risk? Well, if you wanted to buy this back right now, you'd have to pay about $2.10. So minus 210. I brought in 75 cents when I sold the option. So if I were to buy this back and eliminate the potential obligation, then that would put my net loss at $1.35. Yes, I did that in my head. So that'd be $1.35 per share. I sold 2 contracts, so that'd be about $270 in terms of a net loss that I would absorb if I wanted to buy this back early. Jay, you said maybe sell a lower put. Mel, I could buy that back, and that would free up the capital minus the loss that I put in to reserve the trade, and I could think about that. If we look at here's 14 days out, 23. You get about a little over, just barely about 1.5%. Oops, sorry, this was 0.35 for 14 days. That's actually kind of interesting. Jay, you're saying without buying back, just that lowers your average cost. Well, yes and no. Remember what you're doing if you sell another contract while the other one is open. You're essentially doubling down, right? You're increasing your overall position size. If you have, if you've started very conservatively with the first trade, then maybe that's something you can consider doing. And there are some interesting premiums to be had at some of these lower prices. The thing is the difference between 25 and say 23 enough to make you want to do that. Typically, if I'm going to consider selling a new put option against a stock that I already hold shares in, that I've taken an assignment from, I generally don't do this while the put option is open. So I'm gonna go from the perspective of these are shares I already own. I'm usually looking for a discount from my assignment price of about 20%. That's me. That's my preference. I know that other members of our group, Ray, for example, prefers to see a discount of about 30% from that point before he'll go to add another tier or another leg. So it really depends on what you want to do. And the part of the reason for looking for that large a difference is to see is to be able to see a noticeable difference in what your average cost is. That's really just a preference. And if there are others who are willing to do it, work it on a little bit closer basis, that's fine too. If it works well for you, so be it. Okay. So the only reason to really think about buying this back is if you really don't want to have to take an assignment. And there are a lot of people who generate income who are option sellers first, that are not looking for they're not looking for stock assignments. They are. I like to refer to put selling as a gateway to stock ownership. There are lots of traders that are not doing that, and that's fine. If that's the case, for you, then to be completely blunt, you probably should have closed out the position on Conagra a little bit before now, because instead of taking a loss of about $270 for 2 contracts, in my case, unwinding the position maybe a week ago, I don't know exactly how much I might have been able to minimize that loss. But considering where the stock is, 1, 2, 3, 4, 5. Here's the stock a little bit above 24. Now it's a little bit above 23. Safe to say that if I was trying to avoid an assignment, closing out the trade here would have been better than here. So this is, if you are in that camp, and this is not a criticism of taking that perspective. This is just simply trying to reiterate a little bit of the different mindset that taking a more active approach requires. If your purpose is to use put selling and income selling options as another variation on, say, swing trading, then you need to be ready to be very nimble and very quick about unwinding those trades. You should definitely not be doing what I am, which is letting it run through to expiration. If the stock is moving against you shortly after you place the trade, unwind it and move on to the next one. Try to limit that loss and go on to the next trade. Okay, I hope that helps. If, on the other hand, you're working from the same general basis that I am, maybe you're not waiting all the way to expiration, but you are looking for stocks to work with that you would be willing to own, then maybe the perspective is a little bit different. If you're not necessarily trying to avoid put sale assignments from put sales, if you're a little bit open to the idea of owning these stocks, then maybe that perspective is a little bit different. Okay. So that's Conagra. If anybody else has a different idea with these stocks, then feel free to let me know. If you have a different variation that you've put on them as well. Let's talk about Levi. This is a put sell from the last week of April. So this is about a 3-week trade. I'm 2 weeks in so far. And I sold the $14 strike price, brought in 40 cents on this, a little under 3% on that trade. And so let's take a look at this one. And we're seeing some really positive momentum in this case, very different than the picture we have with Conagra and some of the other more defensive names. With a very nice rally here, the stock pushing up towards 17. So it looks like, all things being equal, that one, this is a trade that's going to expire worthless. And with a week to go, this is another one where even if you are Barry, oh, that's hilarious. I guess in times of financial uncertainty, people buy jeans. I will say, I'm seeing more guys at church wearing jeans lately than slacks. So, or some variation on denim. Oh, thank you, Barry. That you gave me my chuckle for the day. I really appreciate that. All right. What this does with the stock this far above the option that I sold is it does open up an opportunity to evaluate the opportunity to be a roller. Now, you don't have to have the mindset of I'm trying to avoid a put assignment to take advantage of rolling. Barry, I just can't wear jeans to church. I don't think it's wrong, but just not for me. Hey, you're preaching to the choir. I am the same way. But like I said, I've seen an increasing trend in the number of gentlemen wearing denim to church. No criticism, just an observation. All right. So this does open up an interesting opportunity, as I said. And even just on the same expiration, Levi is a stock that doesn't offer weekly options. As we can see, the next available expiration, 3rd week of June, which is a little over a month away. Too far out for me to want to worry about that one. Carl, same as well, coat and tie and nice slacks, right? Got to look like you meant to be there. Anyway, there's a little bit of a tangent. Here's the $14 strike price. With the stock this far away from that price, could buy this back for 5 cents. So that would mean hanging on to 35 cents. Of that total trade. Now, there's a lot of people in our group that who are active rollers that would be saying there is no reason not to do this. If you can capture more than 80% of the premium that you brought in when you place the trade, and you can unwind that position a little bit and have the opportunity to redeploy the capital again, increasing trading frequency, then you should do it. This is not a recommendation to buy or sell or to do, one thing over another. This is just a really good example of a good opportunity to think about what kind of advantage this might give you. So I can hang on to 35 cents by buying this back. To work with a new trade on the same stock, I would have to deploy a little bit more capital, but I've got it. So I could go up to 17, $3 higher. That's a $300 difference on one contract, by the way. I sold 3 contracts in this case. So that's about a $900 difference in total capital required to reserve a new trade. But in so doing, here's 30 cents on the bid at 17. This is still 7 days from expiration. All right, so what does that mean? 0.3 divided by 17. It's 1.76% by 7 days. Not saying you're going to be able to do this all the time, but being able to place a trade a week, oops, actually multiplied by 52, that's a nice that's a nice little bit of work to do for the next 7 days. So you got really what you're talking about is a net result of 65 cents, right? Because hanging on to 35 cents plus 30, there's 65 cents for the two put selling trades. Divide by, let's see, 1550 would be the midpoint between 14 and 17. 4.19% for roughly 1 month. Now, if we want to be a little bit, this is maybe a little bit more realistic. If you could do that 12 times, once every month, you're at 50%. This is one of the reasons why, thinking about when you have an opportunity to leverage trading frequency can be a very positive thing. It can mean a material difference, not only on one trade, but on multiple aspects of what you're doing. So, okay, Barry, Sunday morning, no tie, but try to wear a blazer when it's not too hot. Totally fair. Totally fair. We all get to do it our own way, right? So, nothing wrong with that. And I'll be honest, sometimes a really nice set of jeans looks better than a pair of slacks on some guys. So, okay. Oh, thank you, gentlemen. I appreciate that. You're helping to entertain me. I don't need a lot to make me laugh, so I appreciate it. Okay, that's Levi. Also have one on from last. This is last week's trade. Put selling was on CSX Rail Company, selling the 2750. Brought in a little over 2% on that at 60 cents per share, selling one contract. So I went and stayed really conservative on this one. Barry went back to an old friend with ET, Energy Transfer. Good. Was assigned last week for 1750, but we'll get the dividend with today's ex-dividend and then see where it goes. All right. Well, thank you for bringing that up, Barry. I love it. I appreciate it. Let's take a look. Here's Energy Transfer. Boy, nice little dip, right? How did that change color? Went all the way down here, rallying, and it's rallying a little bit right now, up to 1720. That's all really ugly, so I'm going to clear that out. And yes. There's the earnings report. Here's the dividend. And you're right, ex-dividend date is today. So you're signed at 1750. Stock's just a little bit below that price right now, but you brought in almost 33 cents on the dividend. That's just a quarterly dividend. Hey, guess what? That's 2% practically compared to the price you were assigned at. Think you can live with 2% every quarter? I hope so. That's just passive income. Look at this yield. 7.4%. That's definitely above average. And with Energy Transfer, that's a high quality dividend, by the way. I haven't run through the fundamentals lately, but this is a stock that I like to watch as well. Yeah, I may never get back to the $8 or $9 range, but felt with a dip, maybe a good time to jump back in. I can't speak to where I think the value price is right now. I can say that when it was up in this neighborhood, I felt it was a little bit overvalued. I need to run through a new analysis on it and with new numbers in as of Tuesday. I expect I should have an opportunity to do that in the next week or so, to run through those numbers as they filter through to my feeds. But Barry, this is a nice trade, right? Especially if you like Energy Transfer, you don't mind the idea of holding it. That 7.4% yield, that's just regular income coming into your account, you know. Yeah, in fact, you hope it doesn't get back into the $8 or $9 range, right? If you're in at 17.50, that makes sense. I'll be surprised, to be honest, just given, if you think about the larger macroeconomic climate, and OPEC is increasing production of Brent oil coming out of the Middle East. They are trying to reclaim some of the ground that they gave up to U.S. production over the last year or so with production cuts, while U.S. producers have continued to produce. I don't expect U.S. producers to produce less necessarily. That could keep oil prices low, but for a company like Energy Transfer, you're talking about a stock that benefits from the movement, not just the price of oil, but the movement from one locale to the next, transportation, facilities, storage, all those kinds of things. And so Energy Transfer probably benefits from that in the long term. So I'll be honest, I would be surprised if it really drops a lot below where it is now. That's just one person's opinion based on what I've seen in the broader climate. So take it or leave it. Okay, but I appreciate that, Barry. Thank you for sharing it. And yes, good position. You got a tick. Do believe it is a bit undervalued, and that's totally fine. That is totally fine. Again, up here with the previous earnings report, again, the price was up in this neighborhood. It wasn't really undervalued up here. It might be now. All right. Let's go back to CSX. As I mentioned, I sold the 27.50 strike price on this. This one, CSX is one of those really boring stocks, and I'm not just talking about the fact that the market doesn't talk about it a lot. Drops like this aside, stuff like this are really a lot more common, and daily movements like this kind of tend to be more of the norm. This is a stock that you usually don't see moving a ton. And so the stock has been rallying from about 26 since that bottom in April. Now it's pushing up close to 29. So again, just like with Levi, that means that this is a trade in a very positive position right now with a week to expiration. So I can continue to hold it, which is my normal plan, or I can look to see if there is an opportunity to leverage the rolling principle. So buying it back at 15 means hanging on to 45 cents. Again, for a lot of our traders, if they can keep at least 50% of the premium they brought in, they'll take that as a positive. And the next week, it looks like you have to go a little bit out of the money to get anything really interesting or useful out of premiums. You have to go in the money. I'm not going to want to do that. So 28.87, same thing here. That's a little bit in the money. $28.35. Yeah. You start to get into starting to look at contracts here that really don't have any activity here to give you useful price references. Last trade on this was a couple of days ago. So if you wanted to buy this back, you could. It looks like the simpler thing in this case be to take that capital and probably find another position. And that's okay. That's totally acceptable. There's nothing wrong with doing that. Just because you want to be a roller doesn't mean you have to roll with the same stock. That is one possibility, but you may have some others on deck that you're paying attention to that offer a better opportunity right now. Maybe the opportunity for CSX is what it's been, and that's fine. I'm going to go ahead and let it play out. Personally, it's easier for me to let this play through the next week, and if I'm willing to wait another extra 7-8 days, whatever it takes for it to settle through, and if I'm assigned. If it expires and the capital comes back to me, it comes back about a week later, but that's okay. All right. Any other ideas or thoughts on CSX? Go ahead and put them in the chat. We're probably going to run into a little bit of extra time here. So if you have some things that you'd like to review and talk about, then feel free to put them in the chat. This week's put sale is on LRCX. This is a repeat of a position from last quarter of 2024 that has been pretty productive, actually. This is a company that came across that I've been following for a little while, but I really only just put in to the trading rotation, and it is but it is it works in the semiconductor industry. So there's a little bit of AI play here. This is one of the companies that provides fabrication facilities and equipment for semiconductor production. Selling the $73 strike price on Wednesday, bringing in $1.50 on that. Was a nice trade and got the stock showing some positive momentum. Now with this one, the expiration is out to the 23rd of May. So I was able to extend this out a little bit, which is kind of nice. Break the chain a little bit of these May 16th expirations. So we'll see where this one goes, but it has been moving in a positive direction for me. Oops. I can type LRCX. Which means that right now, ask on this is $1.14. I brought in $1.50, so that's not quite. Certainly not the 50% yet. So we'll let this play out a little bit longer, and that's fine. The only other position I have is a covered call on Skyworks. This is a stock I was assigned at $67.50, and has been showing some positive momentum. It was actually a little bit below 67 when I was able to sell a covered call on it on Wednesday. I was able to sell the $70 strike price, bring in $1.40 for expiration on next Friday. So let's take a look at that one. That call is now, here we are at 85 cents on the bid, $1 on the ask. Still moving pretty well. And this is another one where I'm really not that interested in trying to roll this trade. If I get called out, I will have I've baked in, a nice $2.50 gain just on the difference between these two prices. I was assigned at 67.50, selling the 70, so that's nice. And then on top of that, I was able to bring in the $1.50, $1.40, excuse me, $1.40 on this. So, $3.90, and divide that by 67.50. I'm not going to do that math in my head. You know, 5.77% is the net result there, assuming I get called out, and I might not. It may not get above 70 in the next week, and if so, I'll hang on to the stock a little bit longer and maybe have an opportunity for another covered call. So either way, I'm good. But that's where that one sits as well. Okay. Jay, I was going to roll my FCX, but they want 50 cents to buy it back today. Okay. Freeport McMoran sitting at 37.58. And I'm in on that stock at 40. I was assigned middle of April. So Jay, you're still working with a put sale, it sounds like. Depending on what you brought in on that, and let's see. Change my symbol here. Oh, you own it. Selling the call. Okay. Wanted to buy back the call and roll it to next week. So it's one that expires today. Yeah. What strike price are you talking about, and what price do you own the stock at, Jay? What's the strike price that you're working with on the call? $40.50. Okay. Let me expand my view here. There we go. You're right. $40.50. They're asking 50 cents. Stock is $2.50 away from that. I expect we'll see not a lot of activity here. Yeah, no volume. There's plenty of open interest. It's been a couple of days since the last trade on this. You could, if you wanted, Jay, just you're going to let it expire, and that's totally fine. If you wanted to, you could also just put in a buy to close at, say, 2 cents. Since it's expiring today, odds are pretty good that it will get taken at some point before close. If you don't care, that's fine too. Yeah. Let it expire, see what happens. The stock has been picking up some bullish momentum. And I'm like you. I own it at 40. Same way. I'm right here. I'm waiting for it to get back to this price, but it's been rallying pretty strongly so far. So we'll see. I am hopeful. But I also don't mind the fact that I'm still owning the stock. This is, I didn't get this dividend. That's okay. Once it gets up here, there'll be an opportunity. And I'm not saying that I expect it to get up here. I hope it does. If it doesn't, then I'll be a little bit more patient and I'll wait for the next dividend. That's okay too. Yeah. Barry was assigned HPE on 411 for $15. That's actually then it been a nice, a lot of tech has been picking up as some of the news around tariffs has shifted. And so that's put a lot, that's put a lot of lift under a lot of these stocks. So Barry is down here. Here's 15. Here's Barry. So you're sitting a little bit above 17 on it, and that expires next Friday. That's a nice trade. How much did you bring in on the premium for the covered call? 53 cents between the call put and the call premiums. That's awesome. That's awesome. 53 cents on $15. To be clear, that's a nice result. You've got a little over 3%, right? 3.5%. That's a nice result. And you were assigned not quite a month ago. If you can repeat that, repeat these numbers every 30 days. Oops. Sorry. 0.353 times 12. I mean, 42% per year. That's a good result. That's nice. And so there are, it's around 2.5% on the put and 1% on the call. Combined result works really, really nicely. So, yeah, take it. There's nothing wrong with that. Plus the $2 gain, right? If you get called out next week, then this goes a lot higher, right? And you're looking at $2.53 net gain divided by 15. How about that? For 1 month. You can do that several times a year. You're talking about two-bagger. That's why I went with a lower percentage on the call for the capital gain potential. Sure. And if you see momentum building, maybe that's the evaluation you make is where's the reward to risk. If it's picking up momentum and have an opportunity to maybe bake in a little more capital gain, maybe that's an advantage. Maybe that's what you decide to do. Speaking for myself, this is no criticism of Barry's approach. I will say that my general approach has usually been to go with a little bit lower strike price. And I'm not saying anybody has to do the same thing here. This is just another perspective. You do what you do, as one of my nieces like to say, you do you, and that's totally fine. But here's the thing. If I'm in at 15, let's go out. Well, let's go out 3 weeks. Yeah, let's go out 3 weeks. If I'm in at 15 on this, and I can get, by the way, and just to be clear, this is a really nice covered call. Let's, in fact, let's shorten this up a little bit. There we go. Here's 40 cents on 17 for 7 days, right? This is a nice result. Plus, you've got the $2 between that you're baking in for capital gain. I love this. Okay, when you have an opportunity to set up this kind of a thing, this kind of an environment, that's really, really nice. But the only part of this that this is just, again, one person's viewpoint, right? You can take it or leave it. The capital gain part of this is a little bit. It's a little bit of speculation. You're hoping for that gain, and again, if this is where you see momentum going, then maybe the speculative part of this is a little bit less true, and that's totally fine. Again, if this is what you prefer, totally fine. Take it. Go ahead and do it. What I'm about to show you in reality is going to give you a little bit less. But my preference, if I'm in at 15 and I'm seeing this kind of momentum, is to look at, say, 16. Compared to 17 is offering $1.06, a little more than twice as much in immediate income. When I talk about low-hanging fruit, the difference between strike prices when you're thinking about capital gains is not the low-hanging fruit. This is, I'm not going to call it speculation. This is hope. Now, sometimes, and a lot of times, if the stock is giving you the right momentum, that hope works out. And this is $2 compared to $1.06. Plus whatever premium you bring in here. On the other hand, I could still bake in a $1 gain at 16 and bring in this $1, now $1.05. Numbers have changed while I've been talking about it. Okay, here's what that low-hanging fruit is. Again, if I'm in at 15 and you bring in this $1.05, now this is also, again, both of these are really, really nice results. They're 70%. 7%, excuse me, for 7 days. If I can bake in that extra dollar, oops. Now I go to 204. Now I'm going to 13.5%. Yeah. And Barry's offering a perfect counter to what I'm saying. If it's below the strike price next week, I'll rinse and repeat, probably for more baked in on the percentage rate. If I'm holding it for a bit of time, the 3% dividend yield doesn't hurt my feelings. That's exactly the point. And that's why there are no bad answers in a case like this, right? I'm just throwing out the numbers for comparison. But the truth is, these are all really nice results. And this is the advantage. This is one of the reasons why I continue to be such a proponent of option selling, put selling specifically, is because I feel like this is the advantage that we're giving ourselves compared to the rest of the market. They're stocks we like anyway. We're getting useful dividends coming in terms of passive income by holding on to stocks like this. And owning the shares opens up some of these opportunities for covered calls, just paying ourselves additional dividends. And if they get called out, so be it. If they don't, we just keep hanging on and waiting for more opportunities. So Barry, HP is a beautiful example of of what we like to talk about. And Barry, look, the stinkers also happen, right? And current conditions have been hard enough and sharp enough that there's some that fit that description. We talked about Conagra at the beginning of the session. Well, here's GIS. General Mills was assigned on this one in mid-April at 60, and it's showing a little bit of stabilization today. But guess what? It's been a stinker ever since I got assigned. That happens. Still a good company though. So it's the way it is. Yeah. Devon, Intel, and GES. Yeah. And for those kinds of positions, you really just have to be willing to be realistic and ask yourself some critical questions. Are the fundamentals still strong enough? Devon and Intel are two stinkers for me as well, Barry. You have to be able to be realistic enough about what's going on in those and what you think that they mean for the long term. Devon still has a really solid fundamental profile. Value proposition is really nice. Stock pricing is not. Intel still has a lot of problems they're working through. I believe they're going to get through them, and I believe that with the current administration in office, the push towards reshoring is going to be more prevalent than ever, and that's going to work in the favor of a lot of the things that Intel is doing to transform their business right now. Which is why I'm still holding on to that stock. So, it's all a matter of what you how you see the world, how you see it relating to those stocks that you're looking at, and if you ever get in a position where you start to see that opinion changing, then you have to be critical. You have to be able to think critically enough to be realistic and think about it, whether or not it's time to close it. So, all right. Thank you, everybody. Barry, appreciate those comments. Jay as well. Thank you so much. Really appreciate everybody's participation. Hope you have a wonderful weekend and do something special for your mother, your spouse, whatever. It's Mother's Day coming up. I hope you have a wonderful weekend. Your families enjoy a wonderful weekend as well. We'll talk next week. If you have any questions between now and then, let me know. rebelincomesystem@gmail.com is the email address. Otherwise, reach out to me on Discord or Substack. Thanks, everyone. Really appreciate it.